oil prices have been falling, and I wanted to take a look at oil and gasoline, plus USO stock, which is the ETF for oil, and XLE stock, the energy sector ETF. How does this all play together? What is the message we're getting out of oil? I've been consistent saying that this economy is starting to contract more and more. We've got an unemployment report on Thursday that shows that continuing claims are rising. The economy is starting to contract. Supply is starting to build up. Price comes down. Basic economics. But those energy stocks and XLE stock, they're starting to take a hit. Let's jump in. I'll show you a look at the oil prices, USO stock, the ETF for oil, and XLE. Let's jump in. Before we get started, I have a brand new channel here. What I do is I break down the basic little sections of the economy. Today we're looking at oil, of course, a base commodity, one of the most important ones on the planet. Make sure to hit that like and follow button if you're just finding me for the first time. Here we are looking at the actual, this is WTI, West Texas Intermediate. Huge move down lower. I did see, we saw a bounce late last night. I put this chart together last night, but late last night I saw that we're starting to see movement back up in oil. And that's good for me because I like to play fades. We have a basic move here in oil. And here's gasoline as well. This is the one-day chart. If you look, gasoline prices are starting to peak lower or drop lower. Haven't seen this price since December, I want to say late November, early December 2022. So we're getting that relief finally. And I know I've seen it at the pump where you're sitting there saying, wow, sub $3, not bad. Of course, this is in California. Will this continue? Yes, probably, until suppliers start diminishing their supply. They'll start making cuts because they don't want to stockpile this stuff because it costs money more than anything. One of the important things about gasoline is there's usually a backlog. We don't have just a ginormous processing system. So anytime there's any kind of disruption to the flow of oil to produce into gasoline, there's a backlog. Price spikes. Now we're seeing a glut of oil supply. That's affecting gasoline. Gasoline prices are dropping pretty hard. Love it. But this means one of the big catalysts to this is that the economy is starting to contract. We got those unemployment numbers earlier. Every Thursday we get initial claims and continuing claims. And this gives us a pretty good idea as to the base trend line of what's going on with the economy. Now, initial claims aren't really spiking up high. It's actually fairly steady, consistent. We've seen a little bit of ups and downs with people making that initial claim. Okay. But those continuing claims are starting to move higher and higher. The thing about that is, okay, we're not losing too many people to unemployment on a regular, consistent basis, but those that have lost their job are not getting new jobs. That's key. So they're sitting around doing nothing, and they're certainly not driving, and this is affecting the price of oil and gasoline. Keeping things into perspective, this is a bigger look at gasoline prices, and you can see sort of dead center, a little left, the big drop in 2020 when COVID shut everything down. All of a sudden, there was a massive amount of supply. Then there was a continuing backlog of demand because the supply chain across the world for almost every single product was backlogged. Then, of course, we had the war when Russia invaded Ukraine, sanctions against Russia. I know in Biden started releasing the Strategic Petroleum Reserve, cut the reserve down by 50% to stem the shock of the price of oil rising because of demand and the broken supply chain. That was in November 2021, and then in February 2022, Russia invaded. So on one hand, there was some Like when he first did it, I was like, really? We're really in that situation? And if you look at this chart, it didn't seem that bad off. But late 2022, going all through late 2021, going all through early 2022, you can see that big spike there. Kind of makes you wonder, what did he know ahead of time? We know he put a lot of information about what was going on in December. So maybe his move flooding the market probably saved us a lot better than we thought. Who knows? We will never know that answer. In the meantime, trend line, we're still a little high. More than likely, we probably see, if you're looking at this chart, we're probably going to see about 1.5. That would be really welcome. We're just above 2 right now, so that's about a 25% drop in gas prices from where we are right now. I'll take it. I drive a Land Rover, an old classic one. Here is the price of oil. If you overlap these charts, they're very similar. This one, long-term look at WTI, but this is what I really want to look at. So I have the price of oil in the bar chart. Then I have USO stock is the orange. USO is the oil ETF. Then XLE stock is the energy sector ETF. They go hand in hand. So if you think the economy is contracting and you don't necessarily want to jump in on, say, the S&P 500, SPY stock, SPX, whatever you want to trade in that, this is another avenue, and it's something that I pay attention to frequently, and will step in and start making trades. These stocks within XLE, the energy sector stocks themselves, they're not going to see increasing revenues. They will have to take steps to slow production, cut employment, to reduce any kind of hemorrhaging. This is yet another facet of our economy. The economy is starting to cinch up a little bit here. How big? I don't know that we're necessarily going to see a huge recession. But we are certainly seeing the consumer step back a little bit. We are seeing unemployment moderate, a little higher. Because of that, we're going to see supply shift. These companies in XLE stock, the energy sector ETF, are going to have to step forward, start laying a few people off. Revenues will decline, profits will decline, stock prices will decline. So any kind of rally we may see, a big bounce upward, for me, it's consistent that the economy is contracting, and this wouldn't be a buy on the dip, it's just going to run straight up through the moon kind of move. Any kind of bounce is exactly that, a bounce in a bigger trend. Eventually we'll bottom out. But as you saw in those charts for oil, other things like this, we still have probably a decent maybe 10, 15, 25% move lower in oil just to get to baseline. These latest moves we've seen are nothing more than bigger moves within the whole system. It was a lot of it had to do with COVID and the war that spiked all those prices up. We're still getting back to normal. Along with the Federal Reserve and all their moves, they're contracting the money supply, they're contracting the economy. Can they engineer a soft landing? I'm still kind of like, we will see, but I think where they're going to have to quickly lower interest rates. That's not a good thing. And it doesn't mean buy stocks. I know a lot of people are lining up to continue to buy stocks thinking that's it. It's over. Bull run from here. Probably not. All these companies are going to see reduced revenue because consumers are spending less. They're getting burdened by too much debt, too high interest rates, and now they're starting to lose their jobs. Maybe not en masse, but we're getting back to normal. Our unemployment rate right now is 3.9%. Normal used to be considered about 4.5% to 5.5%. We're nowhere near normal. So for me, USO stock, XLE stock, should we see kind of pops higher, I'm likely to step in, sell calls. I may do, it's called a a credit spread where I'll sell the near term, buy the long term, so I'm actually hedging against myself. I end up bringing in a small amount, maybe anywhere from 8 cents to 12 cents on an option. My risk is limited to $1. But I consistently use the same size and I consistently sell these options, these spreads like that. So it's rare for me to I never take a big hit, but it's rare for me to take a hit in general. And I'm just continually bringing in premium. Sort of Moneyball. You don't need to hit the home run. You don't need to hit a grand slam. Base hits are wonderful. And that's how I'm playing this. Make sure to hit that like and follow button to keep up to date with what I'm doing with USO stock, XLE stock, oil, and stock market analysis. We'll see you in the next video.